Hello, John Marquis here, founder and CEO of MyBuilderCPA, and I'm just going to give a quick video of our Tier 2 report, which is often referred to as Accelerator or Established, whichever service plan you signed up for. So this is the middle tier of financial reporting between the top and the bottom reports. Starting out, we have our normal title page here. Our reports are always for management use only, so there's no level of assurance, attestation, or compilation. They're for your use, not necessarily for the bank's use to obtain financing. Then we get right into the face financials, the meat of the report, starting with the profit and loss. So one difference between here and our top level Tier 1 reports is that we don't do any extra commentary, analysis, charts, or graphs. We simply use the time resources that we have to make sure the reports are 100% accurate, and we let you do more of the interpretation on your own. And we still include job-by-job reporting in here if you request it. So right out of the gate, you're going to know if you're profitable or not, which is critical as a business owner, and you're going to know where your cash and liability stands on the balance sheet. And you can use this to create some of your own ratios. For example, if you wanted to calculate your own current ratio, you could take your total current assets divided by your total current liabilities, and it will give you a number, hopefully greater than 1, and it shows that you're solvent. If you're on the Tier 1 plan, we go ahead and calculate some of these ratios for you. Then we also take a look at accounts receivable, because as a business owner, you always want to be chasing down people who might owe you money. And then next we have accounts payable. So you want to have on the radar what might be due soon, and is there anything overdue to subcontractors that you'll need to keep work moving on your ongoing jobs. And then we also have the statement of cash flow available. I don't think a lot of builders use this extensively. It can be a little confusing. We're looking at the change here, so it can be hard to wrap your mind around, and sometimes it's not really necessary for your business. And we can also have some debate based on what's considering operating, investing, or financing. If you want to have a longer conversation about the statement of cash flows, I'm happy to do that with you. Just schedule some time and we can go through what this means. At the end, it's just going to tie to the cash balance that's on your balance sheet. So we're showing $3,228. And if I go to my total bank accounts, well, so maybe this report isn't quite right. So we have April 30th, and we are still doing cash balance. So since we're working with a sample file, I guess maybe it won't tie out exactly, but you can expect it to tie out on your report because it goes through that level of quality assurance before we send it to you. Then we get into the job-by-job profitability. So with the middle tier, Tier 2 reporting package, we still track everything related, all income and expenses related to a job whenever possible, so you can see the individual performance of all of those jobs. On our starter plan, which is the Tier 3, the one below this, we are just focused on the company financials overall, so P&L, balance sheet, and we don't really take a dive into job-by-job profitability. So I hope this helps, and as always, feel free to schedule some time if you have additional questions. Thanks, and have a great day.